Hello guys and welcome again to my channel. So we are still in the manufacturing accounting series. So that is what do we call as cost accounting and reporting in the college levels. So it talks about how to account for manufacturing entities. Okay? So we are at the point where we have talked about the journal entries that are unique to manufacturing entities, and that is coming from that is because of three different inventories. So if you can still remember, what are those? We have raw materials, we have work in process inventory or partially completed inventories, as well as finished goods. So that is the reason, one of the reasons. Okay? The second reason is all about the total manufacturing costs of the manufacturing entities, or the main cost, the main product costs, which are composed of, again, raw materials, the direct labor incurrence, and the factory overhead. So because of those three inventories and three main costs, the journal entries that we have talked about in the past episode came to be, which are unique versus the journal entries for merchandising entities. Okay? Now, after talking about those journal entries, we have used that already here. But before we did this, we talked about the difference between the computation of the cost of sales of the merchandising entities versus the manufacturing. Right? So we have talked about this. And also, in the past episode, I have already, let me, I have already talked to you about the T account analysis and how to use it and what are the advantages of T account analysis and why did I change my methods of computation from this to this one. Okay? Now, in the last episode also, we've talked about this comprehensive problem. So if you wanted to know more, you have to go to the previous episodes. Okay, I guess this is already the fourth video that I've taped on the manufacturing series. So this is again the comprehensive problem that we have considered in the past episode, and we have journalized and analyzed until we got this journal entries. So I promised that we are going to have the 10 steps of accounting cycle in manufacturing. So we are now at step 2, the journalizing. So let's post this to the ledger or the T accounts. So I guess I have to delete this because that was used for the analysis. Let's leave the entries. Yeah, right. Yeah, we can have the entries here. Okay? Now, yeah, those are the product for step 1, identification of transactions, analysis, and the recording of transactions. Now, let's put that to the T accounts. For example, you have cash. So, let's start with putting on cash. Let's put on the debit side 300,000 cash. And let's put a little bit of explanation on that because we will need it in making the cash flow statement, if you can still remember cash flow statement making. So this is investment by owner. Okay, now next is the baby G capital. So let's put that right here, and let's wish that this particular area is enough. Baby G Capital. The baby G capital is 300,000. Next is we have raw materials. So it's an inventory. So it's here. Raw materials. The raw materials is 300,000. And then you have a credit on the accounts payable. So I have to be very careful so that I will not miss any entry. So we have 150,000. Let me check first if it's still recording. Yeah, it is still. So you have accounts payable 150,000 and then cash 150,000. This is payment for raw materials. Again, we have to be very detailed on the cash ledger because that will be our basis in making a simple cash flow statement. So actually, there is a comprehensive problem related to cash flow statement, and that is in accordance with an accounting standard, but I'm going to have to tape it next time. Okay? So we have that. So we're already through with this one, and we have um, what is this? Accounts payable 20,000. It's because of the returning of defective raw materials. Your accounts payable was lessen. It has been decreased. And then also, your raw materials has also been decreased. Next is we have work in process. Work in process is still an asset account, so we have to put it here on the groups of the debit, and we have 150,000. Why is it that we use the 150,000? What is this transaction all about? It's about the direct labor payment. Okay. So credit 150,000 direct labor. Of course, you can already omit the payment and the inflows right here on the left side because it's already understandable that this is inflow and these are all outflows here. Okay? Now, we have already put this. Let's go to 210 or February 10. So there is an account again, prepaid rent, which is 30,000. And here there is a credit of 30,000 for rent. And then that's it for 210. For 225, we have accounts receivable. So your accounts receivable is 156,000. Oh no. 156,000. But still remember that this has been changed because we have changed the sales price from 420 to 520,000. I hope you still remember that. So we have accounts receivable 156,000. What we have here is 364,000 in the cash ledger, and these are considered as received from customers. Customers. Received from customers. Okay, that's it. Yeah, I don't care if that is not written legibly. As long as you can understand that is received from customers 364,000, and we have credit sales. The sales is 520,000. And the cost of sales, that is part of this debit group. Where shall I put this? Here. the cost of sales is 360,000 based on the application. And then we have the finished goods credit. So that is already part here. And you might think that why is it that we have posted credit because finished goods already? There is no debit. Normally, finished goods is debit because it's an asset. Of course, we did a lot of analysis before coming up to this amount, right? And here are the analysis here and the accounts that I erased a while ago. So you don't need to be surprised about this. Still, we are going to have a debit here later on. And also, I forgot, there should be beginning balances. I'll put this later on. Supposedly, they are the ones that should be put first. For example, if we talk about cash, we have to put first the 300,000, the raw materials inventory, we have to put it first. So, let's add that in the end, but it is improper to add them at the end. You are supposed to post them at first before the current transactions. Okay? Let's post that. We have cash beginning, 300,000. I forgot. The raw materials inventory, we put the 300,000 here below. Let's put on 50,000 as the invent beginning raw materials. Yeah, beginning inventory. And then the work in process inventory, this 150. Let's move it downwards. We have to put the 30,000 beginning inventory still. And we have the finished goods inventory. We have the beginning inventory, 70,000. And of course, the capital, we have already 450. We have, no, yeah, 450. And then we did have an additional of 300. We have an additional 300. Yeah, I guess the beginning balances have already been posted. So let's continue where we are. Where are we? Here, right? Yeah. So based on our analysis on the given, we have had this, but this really came from our analysis where we analyzed that the raw materials end is 160,000 and on all raw materials used, 40% are indirect materials, so 60% is coming from the direct materials, which is 102, and the indirect materials is 68. So we have to put 102 in the working process. However, since you have already issued it to production, it will be deducted from the raw materials. And then, as to the indirect materials, we have the factory overhead control account. It is a control account for all the actual factory overhead. So anything or any source of factory overhead and the cost will be put right here. And it is just a clearing account or a control account wherein it will be closed later on against the applied factory overhead. If you can still remember this one. This one. Now, this entry. Now, the factory overhead control that we have recognized here is, oh no, so we have 68. I guess we skipped one. Work in process, 150. Cash, 150. Supposedly, we have still factory overhead control, 130. And then credit cash, 130. We have not put this yet. So let's put it 130. This is for the indirect labor, if I'm not mistaken. And then we have 130 indirect labor. Still, in the eyes of the cash flow statement, those are payment for salaries. Alright? So the direct labor, indirect labor, those are payment for salaries. So we have 130 and 130. So we have put this already. And then, after the 68,000, we have here the rent expense and prepaid rent. Sir, these are actually adjusting journal entries. Now, I have told you in the past episodes that there are regular transactions and adjusting journal transactions. So the regular transactions should be put first on the D account so that we can go to step 4, which is to make an unadjusted trial balance. Okay? After the unadjusted trial balance, we're gonna put the adjustments in order to produce the adjusted trial balance. Let's keep that. Why? Because such steps, including the completion of worksheet, is actually optional. Okay? But we will not skip the worksheet. What we will do differently in this episode, it is because I think these particular transactions are mixed in nature. This is, we do not know which are adjustments or adjusting transactions, adjustment related transactions, and we do not know where are the regular transactions. It has been mixed. So in this journal entries, these are also mixed. We have adjusting journal entries, we have general journal entries. And since they are mixed, we are going, sorry for pronunciation, sorry for the pronunciation. And since these are mixed, again, since these are mixed, we are going to put them or post them in the T accounts immediately. All of them. All of these transactions. So, later on, after posting, if we get the balances of these T accounts, they are considered as adjusted balances. And if ever we're going to tally them, they will become the adjusted trial balance instead of the unadjusted trial balance. Unadjusted, UN, unadjusted trial balance. Okay? So again, what are we going to do? Since these journal transactions, we cannot separate the regular general journal transactions and as well as the adjusting related transactions or entries. We have to post all of them in the T accounts. And the balances in the T accounts later on will become adjusted balances. Okay? So, where are we at? So we have rent expense. So we have rent expense. The rent expense is 10,000 and the prepaid rent we have to credit 10,000. So that is already posted. And then we have the applied factory overhead. So we have to put here 120 and we have another credit account, applied factory overhead, which is 120,000. Again, if you wanted to know more about the factory overhead control and applied factory overhead, you can go visit the previous episodes. Actually, again, these two accounts, the factory overhead control and applied factory overhead, they will be closed in the end. Okay? So they are just clearing accounts or control accounts. And then, we have that already. We have this. There. Okay? So you have 120 and applied factory overhead 120. So transfer to finished goods from cost of goods manufacture entry. So here we have to put the 352,000 again. That is because of the CGM or the finished goods, finished manufacturing, freshly finished goods during the current year. That's 352. And then of course the work in process will be decreased. That one. And then we have the adjustment already. So we have to adjust, we have to add the cost of sales of 78,000 because the applied factory overhead is lacking. So this resulted into underapplied factory overhead. The actual is 198. Yeah, this one. So we have to close it 198 because again, it's only a clearing account and the applied factory overhead. You have to close that. So it will become 0. Yeah, 0. And then 0. And then the balancing figure is in the cost of sales, 78,000. And I guess we've already posted everything, right? So let's complete this one. Okay. So we have the cash. We have the first 300,000 as the beginning cash balance, then investment by the owner 300,000 again, and then from customers they paid for 364,000. We have 964,000 here. And then we have on the credit side we have 150,000 and another 150,000 and the 30,000 for rent and 130,000. We have 460,000 here. 460,000. So 964,000 minus 460,000. We have 504,000. So the cash is 504,000. Let's encircle that one. How about the raw materials? We have beginning of 50,000 plus 300, but we return the 20 minus 102,000 because we have issued it for production. So raw materials has 228,000 balance. And the work in process, you have 30,000 plus 150,000 plus 102,000 plus 120,000 minus 352,000. So the work in process ending is 50,000. And we have the prepaid rent. You paid for 30,000, but since February rent has already been expired, so you have 220,000. 220, no, 20,000 only. And the AR is 156,000. The rent expense is 10,000. Um, the factory overhead control is 0, as well as the applied factory overhead. The finished goods, you started with 70,000. You finished 352,000 during the current period. And then there is an ending, no, there is the cost. Yeah, right. There is the cost of sale, 360,000. So we have 62,000. But then again, that 360,000 is the cost of sales before you made the adjustment for under-applied factory overhead. So we have 62 and then 360,000 plus 78,000. We have 438,000. I guess those are the debits. Let's compute first all of the debits. So starting with cash, we have 504,000. No. You have 228. I'm sorry, I encircled this. Oh, yeah. It should have been encircled. 500, 504,000 plus 228,000 plus 50,000 plus 20. Yeah. Plus 156. thousand plus 10,000 plus 0 plus 62,000 plus 438,000. That's the cost of sales. So we have all the debits at 1468. This is 1468,000. And then we have here 750. Let's put it on a square. And we have 130,000. And we have 520,000 here. And we have 0. So let's see. So we have 750 plus 130 plus 520. Oh no, I guess there is a problem. Why is it like this? The prepaid rent, what do we have here? 78. Oh no, what what did we do wrong? So 430, yeah, we did do wrong here. 1468. Let me add again the debits. We start with 504 and then plus 228. Where's the partner of the 102? Yeah, there is. So 504 plus 228 plus 50,000 plus 20,000 plus 156,000 plus 10,000 plus 0 plus 62,000 plus 438,000. We have 1,468,000. What happened? Where did we get it wrong? Let's check. This is 100,000, 450. So 450. So start with 300 and we have 30 here. We have 50 here. We have finished goods at 70. Yeah, that's it. So we are correct in the beginning. And then we have cash, and then BDG capital, and then raw materials, 300. And we credit the accounts payable of 150. And then we credit cash of 150 for the raw materials. Yeah, am I right? Credit 150 for the raw material, so it's okay. And then the accounts payable has been debited, and then the raw materials inventory has been credited. And then the work in process has been debited by 150, and the cash has been credited because of the direct labor. And then we have factory overhead control, 130 here, and then the cash is 130 for indirect labor. And then the prepaid rent is 30,000, yeah. And then cash is 30,000 for rent, and then the accounts receivable is 156. The cash is 364. The sales is 520. Yeah. And okay, we have the cost of sales 78. Yeah. And then the applied factory overhead is 120 debited. And the factory overhead control, even if we don't use the calculator, 198 is credit. It is supposed to be fine. Yeah. And then the work in process has been debited by 102. And then the credit is the raw materials inventory. And then the factory overhead control has been added by 68. Um, ah, oh no. The raw materials, the partner of this one has not been established. So we have 68. I will not delete this in our video so that you will know also how to trace. So that's tracing. That's very tedious. So you have to be very careful when posting. Yeah. In short, instead of 228, let's add again. So 50 plus the purchase 300 minus 20 for the returns of defective units minus 102,000 minus 68 for indirect and direct materials. We have 160. So this is 160,000. So we'll start off with cash of 504 plus 160,000. Yeah, it should be 160,000 plus 50,000 plus 20,000 plus 156,000 for the accounts receivable plus 10,000 for the rent expense plus 0 plus 62,000 plus 438,000. It should be 1,400,000. So you don't go to the next step, the making of trial balance, until you balance this, because if ever you go to the trial balance, it will not be balanced. 750,000 plus 130 plus 520 equals 1,400,000. Yeah. So if that is already balanced, you can go to the trial balance already. But that would be on the next video, to keep this video short. So again, the manufacturing accounting cycle is, the process is very much similar to merchandising accounting or merchandising entity accounting, as well as service entity. The only unique transactions is just related to, again, the three main costs: product cost, the direct labor, the direct materials, and the factory overhead. And of course, there are three different inventories here in the manufacturing. We have the raw materials, or 0% complete products, and we have partially completed, which is the work in process, and the completed units, which is finished goods. Before it can be sold, it will go through those three stages of inventories. Okay? And also remember that even if you balanced your T accounts, it doesn't mean it is already correct. It is because sometimes if you are wrong here in the journal, even though you have debited something or credited something but wrong accounts, that will not be detected in your T accounts balancing and the trial balance ultimately. And when you omit, for example, an entry, whole entry, for example, this adjustment, you forgot to adjust, this will still be balanced. Okay? Omission of entry. So maybe this type of exercise, or the trial balance, or and the balancing of these T accounts, will only be effective on errors on commission. Like for example, you have not posted one entry, just like what happened a while ago. Okay? Or else the numbers will be, what do we call it? That one. It's a slide wherein instead of 150,000, for example, it will be 15,000. What will be posted is only 15,000. A transposition error of decimals or something like that. Okay, so again, let's make an adjusted trial balance in the next video. So if you learned, please click like, subscribe, and hit the notification bell, and share this video to those who need it. Thank you and see you on the next one.